Hello friends, welcome back. In this quick demonstration, we are displaying the probability of turn in YM in terms of how to trade this effectively. First of all, on a 60-minute chart, we try to find out the trend bias. When these adaptive moving averages on this higher dimension time frame is showing a negative bias, it helps us take the short bias on the execution chart on the right side. Now, early morning, before the market opens, we don't have any reference structure in terms of the price targets. So what we have to content with is take the high, potential high we have seen so far for a given day to anticipate where the market is going to potentially turn, where are the levels. Now, as we mentioned earlier, these levels have to be respected, not sliced through. So if they are sliced through, we don't touch these levels. So for example, at this point in time, when this level was respected here, it stopped. And you see some tails at the bottom. Buyers are showing up and we can take some trade here. Next one, this sliced through these two levels. The close happened here. This is 15-minute chart, which means I cannot use this level. All right. So that is how we are trying to figure out who is in control, which level is usable. All right. The same thing happened here. It stopped and then finally usable. It stopped here, usable. And finally, so now as the day progresses, we have to adjust this. So from the ultimate high, we said, hey, possibly these are the low levels. So we put a block here because of these yellow lines and white lines. Let's say this looks like this is where market might be heading. Now that is first part of the equation, and then obviously we can rotate the bias further and qualify it to the next big bar, right? When I see this big bar, I am more interested that, hey, the seller has shown his intention. Where is this intention going? So it is coming down to the same area, right? A little bit adjusted. So I block it again. Okay, you are still going to be somewhere here. And then market opens and it goes smacking down aggressively. Bias is still short. The left side is driving the bias, which direction we want to go. And here we got again, if I go from this level, the same thing. It is showing. So all these levels are showing that, hey, most likely we are heading in this area for reversal. So once we have, now this is a level 2 tool which comes part of the level 2 coaching. Now we have a reference point, okay? And now you see on the top, this is level 1 tool where we say high probability when we see these lines and dots overlapping. This is potentially a turning time is coming, which means that, hey, if market reaches here at this point in time and price most likely is going to reverse. And then I think, using what we call as common sense principles. Now on the left side, we also have what we call as energy lines, overlapping energy lines. So at this point, we have a 2 smackdown 2 hourly bars, and this hour was, I think they got exhausted pushing the market down. It's not really a complete pure doji, but we got the idea. Plus, from the mean, we have divided 1, 2, 3. This from the mean line, we have 1, 2, and 3 standard deviation move, which means 98% of the data has been encapsulated in this zone. So we are stretched out. If you are aware of ketosis, aware of the tails, we put on a biased tail on this side, which means high probability market is going to reverse. So now we're putting it all together. Now the time has come to activate and push the market on the other side. So from this level, this line is there, and I reached my price level. So what do I do? What do I do to really confirm that my trend has changed? We're going to use what we call as a big bar breakout. So we have placed this automatic tool from, let's see the tool. It's called level 2 big bar trend line break. So again, what are we trying to accomplish? We are trying to accomplish that we have a bias, we have a direction, and we have an endpoint termination, and we are looking for reversal now. So now if I see these lines, we can also use Gann 45 degree as well, right? As we have shown earlier. If you don't like this tool, ultimately let's discuss this tool, because this tool is looking at and beaming some lines from the prior pivots based on some scientific methods where the valence points are going to be broken. So we are in the right zone. I have reached the time also. We cannot say, oh, this time we picked up the bottom. No, this is fine. We know the time, we know the price. Now we have to make some strong argument that, hey, it's time for us to move in the other direction. So on the hourly basis, we got a balance point. And then what we need to see is the quarter of hourly is 15 minutes. We need to find a way to enter with the lowest risk. Okay. So if this is the bias, we can say, okay, if this breaks and if this line is there, we can hold above this, break and hold above this. Stop loss is here. Let me take off. Other option is I just showed you is if you apply this automatic tool, it takes care of the situation right there and tells you, hey, this is another extra bias. And then we take off. The third option is you put on again 45 degree tool, and there's some rules around that, and there's also banking bar rules around that. We have lots of rules, and it's fully automated rules. But ultimately the point is, if you know your hot time, hot price, you find a way, if nothing else, a trend line break, let it break, retest on the other side and take off. So just wanted to let you know, even if there is a high volatility, these tools are self-adapting and testing itself on the other side of the flip is always good. We have discussed that several times, but also understand that you can always use on the 60-minute chart the deviation bands 1, 2, 3, and we take off, right? So just wanted to keep the momentum and the focus going. Because market is going to expand, its volatility is a very profitable time for professional traders, and also you can benefit from this. So keep the focused approach to trading. Thank you so much.